thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We talk about what's impacting mortgage rates on any given day and what goes behind that. So sometimes it might come from the economic calendar or a combination of that with headline news and geopolitical. Sometimes the market sentiment even changes, and good news is now bad news, and vice versa. And somebody who's kind of watching this may get a little confused as to what's going on because, well, some bond-friendly news comes out, and then now, so next thing you know, we get negative reaction. So it's a little confusing sometimes. So we're here to try to give those explanations for you folks. A little bit about myself is I am a loan officer. I do work at the national lender, so we do loans in all 50 states. If we can assist you, we'd love to greatly appreciate the opportunity to help you guys out, whether if it's you're looking to buy and get pre-approved and buy and finance the next property, or if you're looking to refinance and need rent numbers or rate quotes, we can help you with that as well. Without further ado, we'll start off with the economic calendar, which today is a light day today. We only have a couple auction treasury auctions going on. The 2 and 5 year will be coming out. But however, this week we do got some reported data. I'll just kind of touch on that right now. Tomorrow we got some HPIs, which is home price indexes with the Case-Shiller and FHFA. FHFA, if you're not aware, they are the ones that cover conforming loans. They're the general office that watch conforming under the Fannie and Freddie Mac. And we got consumer confidence. We also got ADP. We got the jobs data out this week, so ADP will start on Wednesday, which is the private payrolls. Doesn't always have as much impact with the markets. However, with the ideas of jobs, it has had a little bit more impact of late. And then we also got GDP with the final for the fourth quarter will be out on Wednesday. Then we also got every Thursday we get the jobless claims, so we'll touch on that. But we got another important one. This will be a big one this week. This will probably be the biggest data. Will be the PCE, which is the personal consumption expenditure. This is the Fed's favorite gauge for inflation because inflation is definitely on everybody's mind these days, which is why the Fed's raising rates because it's getting a little out of control. So this will be the big one this week. Will be the core PCE on Thursday. And then Friday, we got the Bureau of Labor Statistics, or BLS, coming out with their non-farm payrolls and unemployment rates. We got ISM coming out with some data here as well, with the manufacturing and then construction spending and such. So those will be items this week. Today just happens to be the day where it's light, but tomorrow things start picking up a little bit. And then we get into the jobs data on Wednesday, moving forward to the end of the week here. All right, so again, kind of like everything else, we've been kind of watching what's going on with the Ukraine and Russia conflict right now. We also got more lockdowns in China, which is kind of driving the pricing of oil down, which is good news for us who go to the pumps. Uh, so in that case, it's good. However, it's going to raise other things such as a lot of the supply chain to disrupt our supply chains that much further, unfortunately. Oil will probably be the only savior in that regards, lowering the price of oil, as will be less demand from China in that case. Um, so, anyways, again, we had some last week. We had a bunch of hawkish talk from the Fed talking about hikes. We're starting to see a lot of reports coming out that that they think there will be a lot going forward. We will see a lot of half a point hikes, maybe four a half a point hikes this year, and then they might halt a little bit. Again, those are some projections. Like Citibank economists came out with next four rate hikes will be half a point, and then pause. So again, that's quite a bit. Obviously, that would be another 2 points added to it before we even get to end of the year here. All right. So and then right now we'll take a look at bonds. We had a rough day on Friday. We dropped 80 basis points, so nearly a point, and which boosted rates quite a bit that day. We'll touch on that at our last moment here, but right now we're up about 5 basis points, which basically means that our pricing hasn't changed at all. We're unchanged from where we left off on Friday after that big steep sell-off on there. And why is that happening? Well, again, a lot of it has to do with inflation. A lot of people feel that with the Fed raising hikes, we could go into recession, but we still have high inflation. That's going to last around for a while. It'll be a while before we can get rid of it. And that is a concern of stagflation. And that's a very serious concern right now for a lot of investors that we might face stagflation coming up here. And that's why we don't have investors really coming in so much to buy mortgage-backed securities, because what happens is when you have high inflation, that erodes the value of a bond over the life of the bond. So the bond's life is over 30 years, and if you got these spikes with higher rates, that kind of erodes that value, erodes its value. So here's today. We got some a little bit of volatility, as you see. We saw some big sweeps, changes here, back and forth, back and forth. So it's been a little bit of volatile day today, as but not a huge day in those terms. So again, pricing's pretty much unchanged from where we left off on Friday. Treasuries did come down slightly, or down to about 2.48, we'll say, 2.48 to round off on there. And that's pretty much it, but we'll touch on average rate for conforming loan limit. So 30 years now up to 4.95%, so rate almost touching 5, and 15 years now at 4.22. These do have points built into these, so just that's why you're not seeing these in increments of eighth of a percent in there. But again, these are the average out there. So if you guys need a rate quote, please reach out. We're here to help you guys out. And if you guys got any questions, please reach out. If you guys like these videos, please help us out. We greatly appreciate your assistance. If you could smash that like button and share, we greatly appreciate the exposure, and we appreciate you guys for watching. You guys have a great rest of your day. Thanks so much for watching. Look forward to see you guys in tomorrow's video. Bye-bye.